Yeah, I'm losing my
We're playing buy
edge.
or sell today, Pete. Stock bounces. We're seeing a stock market bounce right now. It's Tuesday afternoon. S&Ps and NASDAQ both bouncing off of yesterday's lows. Both markets down over a full percent yesterday. A pretty harsh start to the week and a rarity that we see in the stock market, big down moves. And so I wanted to isolate some of that, look into it, and see how we should be trading this stock bounce effect. You know, we've talked about this many times, Pete, the fact that stock markets, just the nature of them, you could attribute it to, the amount of retail traders in the stock market and how everybody wants to jump on buying stocks that have fallen, or
Right.
the fact that people can depend on the Fed coming to save stocks in the midst of a crash, and that's why they bounce. Whatever story you want to put to it, we've already solidified the fact that after a significant fall, like we saw small stocks, the SM75, Pete, was down almost 3% at one point yesterday.
Yeah.
After falling considerably, we know that these stocks, they don't tend to cluster. They don't tend to add multiple down days in a row, and they do tend to bounce. And so I wanted to look at, with all of this number crunching, that's just context. I want to look at strategy now around it, because these are interesting numbers, but how do we put them to action? The fact that the stock market, it's supposed to theoretically move lower on any given day 50% of the time, only 46% of the time. 2 days in a row supposed to happen 25% of the time, only 17.8% of the time. What is a little bit interesting, I don't think it's worth digging deep into for today's purposes, is the fact that once stocks, and this kind of makes sense, Pete, I want your opinion on it.
I do too.
The fact that when stocks do see 4 or 5 days, that's when they start to actually overstate the theoretical. But that kind of makes, like, it's almost this scenario of, if we're in the midst of a crash, then we'll see those clusters of down days. But if it's like a one-off down day that everyone's like, oh, what's the reason for this? Oh, there's no real reason. You tend to see the bounce back, but overstatement in the 4 or 5, and I crunched the numbers 6, 7 days as well, overstating the theoretical. But that's what you would attribute it to, right?
Absolutely. I think you're spot on. Is the frequency that we get to 4 and 5 kind of, it speaks to what's going on in market structure at that point. So I think that would be the case. And the other ones speak pretty much in very good statistical reference. Equities, we know there's that upward bias, and that's represented there in that consecutive lower higher movement scale. So I think there's nothing for me that's surprising within these numbers.
Yeah, no, I agree with you. So let's move on a little bit here, because we haven't seen clustering of down days, because we haven't seen, like we just talked about, a real market crash since March was like flirting with market crash territories. But we even saw you see this huge bounce back in March. What is nice though, Pete, is these big down days, which we have seen in SM75 in September and here in October. We see 1, 2, 3, 4, 5, 6, and even these two, 7 and 8, teetering on big down days. What you see is a lot of green following them. So that is a trend that we've seen historically, is a trend that we've seen recently, and something that we can model some trades off of. And this is where we start to get a little bit to the strategy of it, because I think the easy thing to say is, okay, stocks don't tend to see, 3 days of consecutive down moves. They don't tend to move lower like we saw yesterday by 1% or 2% or 3%, and then the next day move lower by another 3%. So the easy thing to do is to buy, right? Or Tom and Tony and a lot of option traders sell puts into those down moves. But something for the short-term trader that I think is maybe a little bit more interesting, and this number over here speaks to that a little bit specifically, is yes, the day following a big down move in the stock market, 73% higher the next day in sticks, 67% higher the next day in SM75. But so moving higher more often than not, but not moving higher by an extraordinary amount. You see that a 44 cent or $44 notionally average move in sticks, actually a negative value here for the average move in SM75. And that's telling you that while 2/3 of the next days after down days in SM75 are higher, they're by such a small amount that the 1/3 of the time, those down moves are actually outweighing it. So
okay. I got you. That's where I was wondering. Okay, perfect explanation.
No, yeah. Of course, I did not miscrunch the numbers. I am perfect, and those numbers are perfect there as well. But
I'm FedExing you the tape measure as we speak, but keep going.
But what this does pose, though, Pete, is the question, should we be buying in the short term or should we be selling these bounces in the short term? Because what you'll notice here is an SM75 market that would be hard pressed to get positive on the year. And so, if you bought this initial sell off, or of course, if you bought the lows here, you're looking amazing. But a lot of these bounces off of big down days or a couple of big down days might be better selling opportunities. I mean, you highlight some of this stuff historically, and I even want your color, Pete, on today specifically. When you see a big down move and you have all this context telling you the next day that tends to be up, but not by that much. And like we've seen recently, a bunch of down moves here, a bounce back, and then a bunch more down moves. It's not, like a couple of down moves and then the market just takes off. Do you like the idea of selling versus buying these stock bounces, which isn't to say, yesterday's lows, you sell into the lows, but you take all this context, you take your own individual patience, you look for that stock bounce, and that's when you hit it with a sell as opposed to buying into that stock bounce.
Yes. I think that's the one thing the idea of trading momentum, in other words, buying into the bounce. Markets are too efficient. There isn't a successful momentum trader. I shouldn't say that, but the majority of the fund traders that trade momentum, which is basically buying strength and selling weakness. It hasn't worked for a long time. So yeah, I think that you make a great point here. Statistic, and that's, I think that speaks to strategy. You may have a bias. So that bias, if your bias is bearish, this strategy is where you find those opportunities on those bounces. If you are more neutral, then you become, which oftentimes for us, I think, honestly, keeping that bias in check and respecting the range and trading it is where we found the greatest consistent success.
You're absolutely right. Like, this isn't to say that we just love selling stocks and given an opportunity to buy or sell, we're going to sell. It's just more to say, okay, this was Monday. And you and I, Pete, we were on the show between 12 and 1 yesterday, and we bought SM75. It just so happened that this was the lows, but we were down to buy this market. But we find, for our purposes, our strategy, what we're consistent with is buying into this weakness, saying, oh, this is a big down day. A lot of people are getting out of their long positions. A lot of people feeling fear. That's when we'll buy. And when it comes to stock bounces, like you're saying, Pete, the markets are so efficient. Markets know all of these numbers. Big funds, people who are pushing around, market makers, everybody pushing around these markets, they have all these numbers and they're super efficient. So to come to this market, Monday you saw a big down move. Tuesday afternoon, market's already a little bit higher. Now I'm going to buy into this stock bounce. I don't think that's nearly as attractive for long-term success. And you look at the long-term numbers here, a negative value, even on a 2/3 success rate in that up direction after a down move. It's more attractive to buy into the selling into the big down move. And then if you're going to play the stock bounce, I like the sell side of it, and that's what it's suiting up for here Tuesday afternoon. We'll see if it pans out tomorrow and the rest of the week, but I think that's our strategy going forward.